Hey traders, this is Christian from Tribeca Trade Group, and this is your market and option recap for Monday, April 2nd. And pretty nasty day, continuation from last week. What we saw, a lot of volatility, a big move down today, straight down today for the first few hours of the day. SPY ended below the 200-day moving average, which you are going to hear over and over for the next couple days. SPY finished down 2.2%, Qs down 2.9%, IWM down 2.4%, and a bunch of other sectors really got beat up, which we'll talk about in a minute. So what happened today? Well, I'm going to talk about a few things that you probably haven't heard too much about, and I will give you, just a taste of what I look at as an institutional trader for a number of years at Bank of America, working on the Delta One trading desk as well as ETF trading, trading institutional for your biggest hedge funds out there, right? So one of the things that ETFs are used for is basically they're an aggregator. A lot of funds, a lot of registered investment advisors use ETFs for an asset allocation model. So what happens? Some of them do a shift their model or do what their model tells them on the first of the month. Now today is the first trading day of the month because the first fell on Sunday. So what you saw today was, the model for a couple of these funds said, hey, I want out of equities and I want into fixed income. And that's basically what happened today. And they did a pretty decent sized trade. There's one particular fund that allocates risk between large caps, mid caps, small caps, and fixed income, both long and short dated fixed income. So what we saw was just a lot of selling, and the takeaway from this, as I told traders in the trading room today early on, and I apologize if you heard me say this a couple times now, but it is what it is. The bad news is that somebody really got out of equities pretty hard today, and that caused the selling pressure for the majority of the day. One of the things. And then second of all, the positive is that they only do this trade on the first of the month. So there will be no follow through for this particular fund. Now there's other funds that are out there and there's other parties that are doing, buying and selling. But for this particular fund, they do this every first of the month. Sometimes the model tells them to do a big trade, sometimes it doesn't, but they don't carry over to the second day. So all that volume that you saw, and you could see, I could show you something that's probably a little bit off your radar, but shy. This is 1 to 3 year treasury, short dated bonds. You could see the volume today traded about 2 or 3 times the normal volume today, and you could see this in a lot of ETFs. Again, just different than probably, if you're just looking at single name equities, but look at the average. So this column over here, it tells you average volume. So something like this, 45 means 45 times the average volume. So some of these funds, again, they don't trade, millions upon millions of shares a day. Some of them only trade, like this one is materials, basic materials, not XLB. This is IYM, again, probably used by an registered investment advisor because the management fees a bit cheaper, is my guess. Only trades about 153,000 shares. Today it traded 1.5 million shares today, right? So a lot of changing of also in sectors. Look at FXU. This is part of the Dorsey Wright. This is the Frank. This is FV. So Frank Violet is the ETF, and it allocates between. And you could see this here. Just so you know, I'm not making this up. But if you look at FV, so this is another model that somebody uses that happens today. You could see what this ETF holds. It holds a combination of ETFs, right? So it owns FDN. This is just in one ETF, but it's a pretty large ETF. So it owns 5 different. It can own more than that of different sector ETFs. You could see the market cap is $2.5 billion. So when they change this around, it really causes a lot. So if you look at the volume today, where was it? FXU, the utility ETF. Traded. Actually, this one didn't trade that much. 600,000 shares today, but you can kind of get my point, right? there's just a lot of changing on the first of the month in between sectors for various different reasons. Look at this ETF, SJNK. This is the high yield short. Not short, but short dated, so short term. Normally trades 1.8 million shares, traded 10 million shares today, right? So a lot of people doing some changing around. So where besides being kind of rotated around in with sectors, where's the money going to? Well, take a look at this particular ETF. This is the SHV, again, short dated treasuries. Look at the volume, and down here Bloomberg lets you track the inflows and outflows. Look at all the money that has been going off the sideline, basically out of the market and into short-term treasuries, which is basically like cash. Funds can't go into cash, so what they do is they go into short-term treasuries instead. That their fund may mandate them to allow that. And what does this look like in terms of outstanding shares? SHV, this particular ETF. Again, if you're not familiar with it, I'll bring up SHV here, and then I'll go back to that screen to show you what's been going on with it. But this ETF actually saw the most inflows of any ETF out there in the last 2 weeks. So more money has been going to cash than going any other place. So that's short-term treasury bonds. You could see right now it's got total assets of $11 billion. And take a look at this is a chart of the outstanding shares. So look at basically in March. Some in February as well, but this has really been accelerating up as money is going out of stocks and going into cash. And you could see this in a few different instruments. You could also see this. I don't know if this is going to allow me to do this, but let's see. This is T-bills. Look at this. Look at all the money going into this ETF. All right, so a lot of money is just getting out of the market quickly. So what's the takeaway of this? There's a lot of fear in the marketplace, and if you look at it from a couple months ago, cash balances were really low, which is a contrarian sell signal. I would say now cash, looking at this ETF, and there's a couple other of them as well that are really high as well. I'm not going to go. There's about 4 or 5 of these short-term treasury ETFs, which again are essentially like money market cash. Just putting money into cash because funds don't want to be in any other places. So we're getting to the point where sooner or later there's going to be, there's going to be plenty, and I think we're getting to it. I mean, if you look at these funds again, and the amount of inflows that they're getting, we're getting to the point where they're really getting filled up with cash. So all that frothiness that was there in January, I think all that money there's been a lot of money that's been withdrawn and taken out of the market. So I wanted to spend some time on that. It's a little bit different. For those of you who track ETF fund flows, you're not going to, for those of you who track options, call buying and put buying, on days like this, it doesn't really matter. If everybody's moving, if big funds are moving money out of equities, if there's a Micron call buyer, it's really not going to matter for the day. Is it good to take a look to see what they are buying on days like this? Absolutely. But if you're looking and you're like, oh my God, where are the call buyers? It doesn't really matter. They could buy calls all they want today. This is a much bigger pot of money than just looking at somebody who's buying weekly calls and something. So you have to have a little bit of depth. That's what I do. That's what I provide. Is not just looking at option flow, which is great in a tool in itself, but is certainly not the whole picture. Sectors. So what do we have right now for the S&P? I wanted to talk a little bit about sectors. Right now, we only have 4 sectors that are over the 200-day moving average. I think it's tech, so XLK, which we did see a little bit of a further dated call buyer in this particular ETF today, down 2.4%. Looks like Thinkorswim is not going to cooperate with me, but I think it's just tech. You've got industrials. Let me just I've got a spreadsheet that tracks all this. Tech, industrials, consumer discretionary, and financials. Those are your only 4 sectors that are now above the 200-day moving average. The good in that is that makes up, believe it or not, about 60% of the S&P 500. Just those four sectors, a little bit over the 60%. So again, that's tech, consumer discretionary, industrials, financials. That's your best right now. You could see XLI just closed barely above the 200-day moving average. So a lot to watch in the coming days. We'll see if that holds. If those four sectors, again, those are four of your bigger sectors that that are still hanging in there. One that's not is healthcare. That's about 14% of the S&P 500. That's below the 200-day moving average. Notice we did take out a VPOC this morning, so we may see a reversal. Again, I think biotech was in that sector rotation. XBI was down, which also lost the 200-day moving average today, closed below it, finished down 4.4%. And then also you could see these early on today, but home builders, both the XHB, again, heavy volume. Look at the volume in XHB today as it broke. This was already, I think, below the 200-day moving average and just broke further. ITB was another one. Again, XHB, even though they call it the home builder ETF, there's very little home builders in it. It's really the ITB if you're looking for home builders. But these names were getting smacked early on, and you could see the higher than normal volume today as well. So that actually, I think, is the first close below the 200-day moving average. But DHI saw which has been one of the ones where we see a lot of call buying in. Saw a block of 10,000. I did not check to see if it was against stock yet, but I think further out calls. There's also some open interest with that one. Let me just bring up my overall sheet because it looks like some systems are slow a little bit after hours. So this was a little bit different than what we normally see on a washout day. There was a little bit of call buying. Again, some of it really small stuff, so I don't read into really small stuff, but Sohu, this name stands out to me. We saw call buying a couple times in this name. This is one of the weakest, although this is one of the weakest charts for one of the Chinese internet names. So again, great for a day trade. I would not want to really own this regardless of the option activity. Up 6% today, but well below. So great for a day trade if you happen to trade this one. It was up 6% today, but look at this thing. Nasty looking chart in my opinion. Really don't want any part of that. To be honest, we'll see if maybe there's more call buying that comes into that name tomorrow. There was also right out of the gate, there was VXX call buying. There was also SQQQ call buying, short Q. Somebody was going, when somebody buys calls in a short instrument, they're essentially just going short the Qs. They did that. There was a little bit of call buying in some of these biotech names that got beaten up. GBT, AMRN, EXEL also all saw some call buying. Macy's saw some really small stuff, but again, some activity there. XLK, which is an interesting trade going into earnings. Somebody bought the September 65 calls. Also some XLY, consumer discretionary calls, also went up. Some E-Trade, which I have to check tomorrow's open interest. And then you have this little stuff going up. Little GameStop calls that went up. Again, really not high quality order flow, I would think. So here and there, kind of nitpicky stuff. A lot on the put side, a lot on the Qs, SPYs. Just saw repeat call activity. Some individual names, Starbucks as well as IBM saw a lot of puts. They saw repeat put activity. I did not chase any of this. So what did I do today? And kind of, now that we're through about 13 minutes of the video, so what's the strategy in this type of market? Right now, I think that you want to, until the buyers, where we could really see the buyers come back in. Again, I pointed out those money market funds, which I'm calling them, even though they're short-term treasuries. The balances are really high in them, telling you that the buyers are just not in equities right now. So for now, like days like we saw on Friday, if you put on some trades overnight, looking for, basically, which I think the couple days that we've seen, these big green bars to me is short covering, are short covering rallies. So, we are going to set up for squeezes every now and then as we get really oversold. We may get one tomorrow. I think you just have to be really quick and sell the rips and then just play, what I did today is play index puts all day today. I think that really gave a lot of opportunity. And if that's what the market's going to give us, if that's the only trade that the market is going to give us, then by all means, I'm going to exploit it. There was a couple times today, and I put this out on Twitter today. I said, watch, we'll probably see a little bit of a bounce. Notice that we could not get over the 20-period moving average. Here we got a slight little bounce. That was a great place to reshort. Here was a bounce, the usual lunchtime bounce when the volume is really low. I told everybody in the trading room, I said I would not read into. I said I would expect a little bit of a bounce till about 12:30. Look at where we actually faded, right at the 20-period moving average. This is where I put some SPY puts on and sold down to here. Now, granted, I tried to sell again here, and then once we saw this little W pattern take shape, I just abandoned the puts. So we did finish off the lows. I did put a couple small trades on for tomorrow for a quick bounce. If we get that quick bounce in the morning, out. Until we really see that the buyers are back in control of this market, and we'll need to get back above the 200-day moving average. All right, so that's it is what it's one of these markets where it is what it is. You have to be very nimble. I don't think that you could carry a lot of positions, either in quantity or in a number of a number of concentrated positions right now. Newmont is one trade that I've got on right now that I got into last week. Did pretty well today. It actually finished off the highs, but at least this is something a little bit different. Just see how the chart finished up for Newmont. So to have different sectors and looking for different areas of strength than normal, I think is also what you have to do right now. All right, so thanks for watching today's video. Have a great night. See you tomorrow.